Alright guys, we're back with the business strategy game. We're working on our decisions for year 16, so let's dive in. I'm here on the first screen right now. What we're looking at just the performance charts. We haven't started off here before, so I want to kind of give you guys a little insight on what's going on. You can see kind of just the trend over the last few years, how we've been doing. So our net revenues increasing. This is good. We want to keep that trend happening. And just so you guys know how we ended up after last time, we have we slid into first place. So yeah, looks like our strategy last time worked out with the private label. We're actually looking to do something very similar this year, which is interesting. Just to give you guys a quick history in case you didn't see what happened previously. Year 10 we didn't own anything. Year 11 we were in last place after a big private label snafu. Year 12 we were still in last place, and even worse. Year 13 we're still in last place, but kind of started to climb out of it. And then year 14 we slid into third place, and then year 15 we left everybody. So that's kind of just letting you know where we have ended up and how we, well, not really how we got there, but we'll talk about that here in a minute. So here we go with the reports. Earnings per share increasing, net revenues increasing. Those are both good. Return on equity is kind of a pass-fail, so we were failing and now we're passing. Stock price is going up, which makes it more expensive for us to buy back stock, which is what we want to do. So we're going to buy back stock in bad years and let it ride in the good years. Our credit rating is the pass-fail system as well. We need to get a B+, and we're just failing. We have a really failing financial strategy. No one on our team knows anything about money other than how to spend it. So as you can see, that's what we're doing. The image rating, yeah, we're doing good with image. Not too bad. Just a couple levers with that. And then as you can see, just our market share. So we our internet sales are growing. That's great. Our wholesale shoes are really the crux of our strategy. But as you can see, we weren't doing so well in private label, and now, you know, well, over the last few years, a large portion of our sales have come from private label. Last year, not so much so, but the ones that we did so were profitable. So we're going to try to keep that trend going. And yeah, just getting a better market share and hopefully being able to squeeze out more profits, although things are looking dire as far as profits are concerned. It looks like we're going to be going into a price war here, and I'll show you why. So let's take a look at a few reports. Let's look at the market snapshot, letting you guys know where we ended up last year. So as you can see here with the pricing, in North America we are the lowest priced shoe, and we have 24% of the market. We're losing in celebrity appeal to Team B, and we're losing in quality to Team C. So from what I can see, those are the biggest factors. I mean, we are spending less in advertising, but not that much less. We do have more models available. So I mean, it's really a situation where we're really trying to figure out what it is that's moving the needle and allowing company B to have a larger market share. And I'm thinking it's just the celebrities, because they just have such a discrepancy, or they have such a difference to us. Now, as you can see, what they did here with the private label segment, they underbid us, but they only took half the market, and that's because of the capacity they have. Let's just take a look at their capacity. So we can see who has the most production. We actually just brought in some production last year, so we have that available this year. We're the only team that built capacity last year, and that puts us at 10.8. So we can actually create 10,800,000 shoes, which gives us a greater capacity than any other team. But at the same time, you know, we really just want to focus on being able to produce as many shoes as there is going to be forecasted demand. So as the markets increase, we're looking at increasing our capacity just to keep in line with market demand. We contemplated building enough capacity to flood the market, but that's going to depress prices. So we don't want to be too aggressive with that. We do though want to maintain our leadership above the other teams, you know, and if push comes to shove, you know, be able to outproduce them and drive prices down. So, you know, we feel it's more or less like an arms race, and we are willing to play that game since it's a huge part of our strategy. Now going back to the market snapshot, as you can see, we've been trying over years to move away from companies B and C, and we've started to do that with our models. But company B has chased us with the quality rating. So we were trying to go up to a 7 and an 8 quality rating here. They are chasing us. They're not staying at their low quality cheap shoe. They are moving up in terms of quality. That is going to force the material costs to increase because now everyone is trying to make a high quality shoe. So yeah, that's gonna eat into our margins. It's gonna increase our production costs, and unless we increase our prices, which it doesn't really seem like there's a whole lot of wiggle room on the pricing until we start getting closer to Team C, and even at that, we're gonna have to find another way to compete. So as the shoes become more and more similar, the weighting given to pricing and quality and number of models available comes down, and the weight given to all the other factors, advertising, delivery time, everything else goes up. All those things are more expensive as well. So it's getting to a point where everyone's trying to compete in the same little area of the strategy map, and there's a lot of space, and everyone seems to try to fight over the same market. So it's kind of frustrating. Looking at the remaining markets here, we have Europe, and there was a stock out. Actually, we stocked out, and so did Company C. So Company B, they actually picked up quite a few sales last year in Europe just from stock outs, just because we didn't have enough inventory there. So we're gonna have to figure out how to rectify that this year. As you can see, we increased our strategy, or not, we increased our quality here last year. I'm guessing if I know my teams, I think Team B is also going to try to chase us with quality, and they're selling for a higher price as well. They can do that though. Well, actually, you know what? I don't know why they're getting so much market share here. If you look at how we're stacked up in North America, they're significantly under advertising compared to us, and they also don't have that much more celebrity. So I just don't understand. I mean, they're giving a lot more to retail support, which means they get more retail outlets, so I'm guessing their shoes are more widely available, but still, at the same time, I mean, we do have a lead on them. It's just not anywhere near as large as I would like to see it. In the private label market, they really undercut us here. They are barely making any profit. I think they even went negative here in this market. I think they were trying to deter us, but we still were able to sell, and we were able to sell profitably, so being able to make this much profit, even though we didn't sell all the shoes we made, because they ate up so much of the market, I think we still end up with a profit just based on our selling price being so close to the maximum. And you can see here we're swallowing up market share, moving away from Team B, and we're moving up as far as quality is concerned. So that was our strategy in Europe. In Asia, it's the same way. We're moving away from Company B, up in terms of quality, and swallowing up market share. We have 32% of the market, which is excellent. We want to maintain our ability to produce and produce cheaply here. We are heavily advertising in Asia. And although we don't have the celebrity advantage, nor do we have the retail outlets advantage, so we're not available everywhere, we are still doing very well. We can't believe Company C had a stock out. They do have a plant in Asia, and I don't know how they ended up with a stock out in Asia. They did buy capacity, I think, the year before, so they should be, I don't know, I don't know what they're doing, but they really need to get that together. In the private label market, as you can see, we got significantly underbid. They ate up almost all of the demand in the market. We were able to sell a significant profit, but we didn't sell anywhere near enough shoes here. So having 520,000 pairs of shoes just go into the trash, it's not good. Not good for profitability. That really hurt us. We don't know why they sold for so cheap. I mean, I think they're really trying to pull our strategy, the strategy that we employed previously, that kind of deterred them out of the market. But that strategy, that cost them first place. They should still be in first place. If they weren't selling shoes at negative profit, they would still be in first place, and that's what we're worried about this year. We'll tell you about that here in a second. In Latin America, they undercut the market, but they didn't go full in, so we were able to get significant margin. We were able to sell all of our shoes. There was actually more demand in this market than there was supply on either side, and we got a good profit on these shoes. We're still the profit leaders in Latin America, so that's excellent. Same strategy, more models. We're trying to increase our quality as well, and Yeah, we are the celebrity leader in Latin America. So I mean, we're just killing the market. So Latin America is our North America. As you can see, we're the market leader here, and Team C was the market leader, having significant market share. We're even gaining in North America. So that's really what's allowing us to continue. So now the question is, what are we going to do this year? The real question for me came down to how we're going to deal with private label. We already know where their production is, so they don't have enough production. Just like last year, they don't have enough production in order to eat up the entire private label market, and I don't know what we're going to do. We thought about just tanking the market and just selling it at rock bottom prices, but as it stands right now, there's no reason to do that. They don't have enough production to eat up the entire private label market. There's always going to be room for us to be able to sell unless Company C comes in. Company C is the wild card. If Company C stays out of private label, and we don't understand why they would come into it, because they don't have the production, they don't have the capacity to produce both for their branded shoes and for private label. So they either need to build capacity, which if they build capacity, there's definitely going to be a glut of shoes on the market, because all of us combined can produce more shoes than the market needs. That's going to depress prices. The simple supply and demand curve here. So we are still building capacity. We will never stop building capacity, but we're just trying to stay in line with the increases in demand, because demand increases every year. When it comes to Team B, we don't know what they're doing this year. They might start trying to build more capacity, and if they do build more capacity, we're going to know that they are out for blood in the private label market. I mean, we might just let them have it. Them playing in the private label market and playing so low is hurting their profits. It was hurting ours when we played that game. We tried to get them out of the market. They've built too much capacity for them to stay out of the market. They're going to have to figure out a way to run their plants profitably, and if they have idle capacity, that's not good. And then as far as Team C, they just don't have enough capacity. They had stockouts last year, so they can't play in the private label market, and that's hurting them right now. That's why they slipped down to third place. But it's probably safer for them to stay out of it if they're watching what's happening to Team B by playing in the private label market. They're gonna start to see that if Team B keeps building capacity and we keep building capacity, there's just gonna be too much production. It's gonna depress prices, and they're gonna build capacity too late to take advantage of the profits. Which means that by the time they actually have the capacity online to produce those shoes, they're going to be losing money every single year trying to dabble in this private label market that has tanked. It will have tanked. It will be terrible. So looking at the performance benchmarks, we're just looking at what private label shoes are being sold for and what they're being produced for. And what I'm looking for is just seeing we're really producing shoes, both us and Team B, in Asia Pacific and Latin America, and for some reason they're able to produce a little bit more cheaply than we are. The high, well, actually, you know what? This actually is because of the fact that we didn't sell those shoes. So the fact that we didn't sell the shoes actually pushed up the cost for us compared to them. They did sell the shoes. They just sold them at a loss, as you can see here. So their margin was negative here in private label, and that's because they were selling their shoes at a loss, which pushed their numbers up here down. So our strategy this year looks a lot like it was last year, where we're trying to produce and sell internet wholesale, keep our market share there. We are bidding for celebrities this year. You'll see we're putting in fairly conservative bids on all these different celebrities. If we get a few of them, great. We still have Shakira and Nick, and we really want to keep them, so we're willing to spend a little bit more. But we have them locked up for a couple of years. So these guys are all available right now, and we'll pick up what we can. We know so far the BSGs have had a very aggressive celebrity strategy. We don't expect that to stop. We only want to pick up celebrities if they're profitable for us. So we're not going to spend a ton of money in marketing just to pick up these celebrities. And then as far as private label goes, we decided not to sell the maximum, so we're not going to go max in any market. We are, it looks like we're going about 60% of the market, if I'm doing the math right, and we're doing a fairly maximum strategy. So we're assuming that the other team can only take advantage of about 50-60% of the market if they go all in with private label. and we're hoping that we can pick up about 50% of the market, 40-50% of the market. We'll take up more if they decide to go all in one. So we just don't know what they're going to do. We want to have shoes available to get the maximum profit that we can this year, since this year's probably going to be the last year that we can do that. And that is a wrap for our plans. Signing off.